So first of all, Tom, thank you so much for your interest and for joining the CRTA. We really appreciate having members like yourself. And I wanted to kind of start off by having you maybe describe a little bit about Diacsus and what you folks do and what sets you apart from other companies in the general space.
Yeah, that's a great question. So Diacsus was formed about 3 years ago, and really with the intent of being a boutique advisory and consultancy supporting the financial services marketplace. And so we do a lot of coordinated and facilitation type work for tier 1, tier 2 size firms. We support and engage with fintechs and regtechs, and then we also engage with private equity firms as well. The scope of what we do includes reviewing and executing on target operating models, on roadmaps, go-to-market strategies and enablers. And we also do deep dive reviews and assessments in firm capabilities and how they're executing. We help financial services firms identify where their solution needs are, and we help those solution type firms identify what buyers or buyer personas are looking for. We also support industry around engagements related to research activities. So as an example, we recently partnered with a fintech to deliver on a research report around what the GSIBs care about as related to data and regulatory expectations. We're now looking at doing an engagement in the private equity, private credit space in terms of the changing impact and growth that they're having related to data risk and regulation. So those are examples of industry work that we do. Typically, they get sponsored by one of our clients, and then we would do a bit of a roadshow with it, and we usually have a redacted version that we can speak to more broadly. Let's say at industry associations like the CRTA would be an example of that. And then the next space is a bit different for me personally. I hadn't really thought that we'd get into the space, but it tends to be something we're pretty good at. And we perform both buy-side and sell-side commercial due diligence reviews, either for, on the buy side, for private equity firms looking to invest or acquire, or it could be for solutions firms and entities looking to sell their product or their business, or to just get more investing and funds into the marketplace. So we've done about 20 or so of those. And it's cut across both for-profit and non-profit types of entities. So in summary, the target types that we specialize in terms of capabilities would deal with data, digital assets, risk, and regulation. And then, of course, the strategy wrapper around all that.
Interesting. And what markets do you currently play in or plan to play in? Are you multi-jurisdictional at this point?
We are multi-jurisdictional. We tend to be focused with more in the Americas and in the UK and Northern Europe. That being said, we do have client activities in broader Europe, and we're just starting to re-engage in the Asia Pacific space. So one of the key opportunities for us that we have seen is related to the Canadian marketplace and familiarity with some of the key financial services firms there, like TD Bank and Scotiabank, Harris Bank, etc. and BMO and others, and really being able to have some connection there, particularly around regulatory obligation needs. But there's also cross-border activities that their entities have, like in the U.S. or in Europe, that have synergies and have a play. So we're starting to do more activities and engagement in the Canadian marketplace too.
Okay, well, sort of double clicking on the Canadian marketplace, do you have any comments or a view on the current regulatory environment here in Canada? Are there any changes that you'd like to see that sort of touch on compliance management at all?
Yeah, that's a great question. I think that we continue to see an involvement in data privacy and requirements for securing data, protecting data. AML and KYC continue to be a hot topic and a broad need across the globe. Firms, especially the larger firms, they want to have one core type of model around policy standards, and then the ability to execute. Some of the challenges that exist with the firms is they tend to be bifurcated and may have grown inorganically, and so they may not have caught up with all the integration needs that they'd like to have achieved at this point. So they're operating with different functionality, so they've got different levels of conformance, and I think that's some of the challenges there. I think that there are some other cybersecurity, some other resiliency protection needs and requirements that are top of mind. If activities and regulatory conformance types that seems to be following the globe, like with DORA in the EU, the Digital Operational Resiliency Act. And I know that there are specific needs and requirements as well that are evolving in the Canadian marketplace too. I think what's interesting for us as well, we want to learn more and be engaged more within the regulatory technology community, as well as what firms are buying and are related to them. So while I've stressed those points as some examples, I think there's also an uplift for us for awareness and to be able to engage and have a broader set of understandings, if you will, around the evolving regulatory marketplace, as well as what firms are doing in terms of their challenges, needs, and opportunities. And I think as well, the relevance for us to engage is about building networks, building relationships, and being better and more reasonably connected. So for example, I've got two types of examples to share with you. One is sort of a thematic that this is an observation actually, that many, not all, but many of the Canadian financial services firms tend to holistically work together around rule interpretation and guidelines and needs. And I think that's the power of CRTA, for example, bringing those groups together. And they tend to follow in unison, if you will, in terms of how they interact and react for that matter. So being at the table and part of that is one thing. The other point is I've have some of my clients, firms like Seclor and Kingland Systems, that I had introduced to the CRTA, and they are members. And that was just based upon some discussions I'd had with Paul Cherterhouse, as well as where these firms are seeing opportunities and needs. And so for me, I thought, wow, if I'm advising these clients to join the CRTA, perhaps I should be at the table too. And so that was another reason for getting connected into the CRTA. So I realized I expanded upon that question a bit, both in terms of the what, but also why I think it's relevant to be related to the CRTA.
Yeah, well, I appreciate that. And we appreciate not only your membership, but also your advocacy in helping us kind of touch more members. So we appreciate that very much. You touched on, some technology partners that you've introduced to the CRTA, and obviously the CRTA is very interested in the use of technology for the purposes of achieving, financial compliance and managing regulatory issues. Any comments about technology that either you use or you recommend that your clients use? Anything that you see interesting on the technological front these days?
So I'll speak to those more in terms of the types. I prefer not to actually name firms
Sure.
directly, but I think that the types of capabilities that are top of mind would include those in the GRC space, the government's regulatory and compliance space, particularly around needs such as horizon scanning for regulatory rule issuance and changes, being able to have a repository of what those rule changes and impacts and needs are. Policy management in terms of how firms comply to the various regulatory requirements and how staff and within firms are made aware of what regulatory needs are and like what might need to change even within a firm's internal set of policies and standards and their control sets. I think that the regulatory tech space has become more refined because it's been consolidating. There are a number of players out there, but we've seen a number of different investments and acquisitions over the past 3 years that indicate that the value that these firms provide is quite significant, and the drive for investment is growing significantly. Firms that were previously, and I'm talking about RegTech software firms, right? They were previously valued maybe $30 million, 3 years ago, are valued at 115, 120. There was a recent announcement today of an acquisition that is 17 times the value of the revenue that was acquired from 27 million. This is in US dollars, 27 million to I think like 430 or something like that. It was a big number, and that's impressive and surprising at the same time, because you would expect maybe five times.
5 times sales,
17 times was a bit shocking. So I think that the GRC space is pretty hot. One other space that I think more and more firms are looking to is to be able to consolidate their regulatory reporting activities. Now, it depends on the firm you speak to. I think every firm would agree they want to achieve the minimum capabilities. No firm particularly wants to have the regulators identify gaps and you've got technology debt that you have to address. So I think most firms want to have a reasonable, viable product as to their regulatory reporting solutions. And there are a number of firms that are specializing in performing the regulatory reporting activities, such as shareholding disclosures or position limits, that is becoming more and more desirable. So we certainly are seeing that with tier 2 firms. Some, not many, but some tier 1 firms are starting to get into that space. Some firms have made investments through their strategic principal investing groups into such technology firms, and they're becoming customers of these. So I think the uplift and move out of regulatory reporting to some of these financial services providers that do reg reporting is another big shift. The supervisory ownership and the accountability for reg reporting, so of course, just with the financial services firms, but they have specialization that this is what a RegTech software solution provider does, is becoming more prevalent than what I've seen in the past. So GRC, specialization, regulatory reporting, I think are key. Next part that I'll bring up is, not meant to be controversial. It's just more of an observation. I think ESG solution providers around classifications. They're probably going to be more stronger with those jurisdictions that tend to have strong rules in that place that remain enforced. So like Europe, maybe elements of Canadian regulation. Others, like maybe in the US, are taking more a wait and see approach to see how ESG rules are changing. That being said, through some of these industry surveys reviews that we've done, we have observed that more and more firms are not aggressively focused in the ESG space. They'll still maintain it in I'll use the word reasonable pockets for their clients. But there's a much bigger shift in focus, especially with buy-side firms, with ETFs from mutual funds, maybe indices and benchmarks, a shift as well, particularly for passively managed investment portfolios. And then again, the private equity, private credit space, alternative investments is seeing pretty significant growth as well.
Mm-hmm. Yeah.
So, if I were to highlight, those three themes that we're seeing within, the type of software and solution products, that those tend to be big. So GRCs, reg reporting, and then how ESG software providers, where they're focused, probably more by geography now. Classification needs become relevant. And then the support of private markets, alternative investments. By the way, the latter is really, really hard because the data almost is always stale. And how do you figure out the right way to make the data current so that you're mitigating your data risk and regulatory requirements needs?
Mm-hmm.
Like in the latter, for example, it's the only place you can get information on an investment for a private placement is through the company, and the company does some minor acquisition, but they don't tell you right away, then the data is already stale, right? Or the information about what they have is stale. So it really is a difficult situation for financial services overall to have to deal with.
Yeah, very interesting. Tom, you talked in your earlier comments about your rationale for joining the CRTA. Maybe you could comment a little bit if you have any thoughts about what you're hoping to get out of your membership, what you're hoping to see at the CRTA.
Yeah, so we're very thrilled to be part of the CRTA. Thank you for the opportunity to join. I'd say first and foremost is to build up network and relationships with the members of the CRTA. I think second is just to continue to become further educated and aware of both the regulatory needs, the firm needs, as well as what solution providers are doing in this space, and maybe it's something we can help contribute. And then I think the third is really to be actively engaged in some of the focus topics areas or working groups on some of the different initiatives where we think that we can add value. And I think those are the top reasons. Another benefit, of course, is that these relationships, maybe could turn into help that our company can provide a particular firm down the road. But we certainly keep in mind that this is an industry association, and part of what we do is we want to support for the good of the broader industry. Mm-hmm. And like I mentioned before, I think this is a real opportunity to get more involved in the Canadian space than we have before. And I think the Canadian market is strong and evolving and relevant.
Fantastic. Well, we look very much forward to your involvement, both in the the Canadian industry and also within the CRTA. And thank you again for joining and bringing other members, and knowledge about the CRTA to the broader community. And we really look forward to the year ahead of us. Thanks so much, Thomas.
Thank you very much, Rob. I appreciate the time.